Let's kick off with your views on the global markets picture right now. It seems that euphoria around Ben Bernanke's comments and more stimulus appears to have faded somewhat, but we know how addicted the market has become to stimulus and quantitative easing and how key it is for risky assets. What were your thoughts on Ben Bernanke's comments late yesterday?
Well, Eleni, I think that's right. Some of the euphoria has faded, but remember that the actual Fed meeting is on the 25th of April. And I think one has to be careful of getting too bearish on the markets leading up to that. A lot of punters are still looking for a QE kicker to come. So the markets, I think, will have some sort of bullish undertone for the next few weeks.
In the meantime, in terms of the local market today, a bullish undertone, but Anglo American's share price really has come under pressure. It's sitting at just over 293 Rand, almost 294 Rand today, but down 1% and leading the losers list today. A lot of concerns around its Chilean mine assets. What are your thoughts on the prospects for that company as it has this acrimonious issue still playing out with, of course, Codelco?
Well, there was a lot of rumors flying around about that mine closure and stoppage. We have heard officially after the close that they successfully appealed against that interdict, and so that stoppage has sort of is now in the past. I think they may still have a bit of trouble going ahead with that, looking forward, but on the whole, perhaps a bit too much is in the price now. That was a drag on the index today, and we might see a bit of an uptick tomorrow on the back of the more positive news that came through at the end of the day.
And of course, trading ex-dividend this week. Just looking at some comments from BHP and Rio Tinto. We know that those two miners are looking to exit their diamond assets. At the same time, Anglo American putting $5.1 billion to tighten its grip of De Beers. What are your thoughts on the comments from BHP and Rio in light of the fact that Anglo American has increased its stake in De Beers recently?
Well, it probably just highlights the different focus of the two companies. Anglo's is far more of a precious metal, sort of focus. Golds, platinums, the diamond, as you said, it's more of a highly geared play. Billiton has focused a lot more on the base metals and oil and gas. So I think it really, I don't think it's that much of a surprise and any indictment on any of those industries in particular.
Overall, though, it seems that the financial sector has really come to the fore this year. Talking to a technical analyst, they're saying that they see financials continue to outperform the resources sector. What are your thoughts on the sectoral rotation that we've seen?
We seem to see a lot of this ongoing rotation out of the resources sectors and into the financials and the industrials. They've both been very strong, and every time you think that they're fully priced, sell at your peril. There seems to be a lot of decent flow still coming through into those names. They perhaps are more defensive, but I think the foreigners like them, and there's still a number of buyers around, that's for sure.
If you had to be betting on an outperformer in the financial sector, which of the big four banks or big banks, I suppose Able and Ebel and Capitec included in that, with Capitec's results coming out tomorrow, which of the banks would you be betting on?
Well, our current sort of favourites are Absa and First Rand. Again, they have priced a lot in. Possibly from here, I would say Absa still has a bit more room on the upside relative to the target price and the outlook that we have. Something like Able is, of course, another play altogether, being focused on a different sector, has a higher growth outlook. It is starting to come into favour more and more with the likes of some of the foreign players. So I would perhaps favour those two picks, Able and Absa.
Of course, a smaller cap stock today, Iliad coming out with results, full year headline earnings per share dropping back by some 76%. Of course, we know that results are not forward looking, and we know how the construction sector really came under pressure and has come under the pressure for the past few years. Anything that you'd like to point out, though, in light of the fact that that share price really didn't change in reaction to the results today?
Yes, I think it's fair to say a lot of that was priced in, and perhaps the number looked worse than it really was. From a brief look at it, there seemed to be a lot of restructuring in that number. The fact is they still maintained a healthy dividend, and the revenue grew nicely. So I think their outlook looking ahead is actually fairly positive. I think in their mind, they're well positioned for growth. So assuming the construction sector does undergo some sort of recovery, They probably have. They're probably priced most of the bad news in at this point, and the best is there's some good news still to come. It looks like.
So the bad news priced in for a company like Iliad, and looking at expansion, of course, in Africa. We know the infrastructure plans from governments and the private sector across the board on the continent. Would you be putting your money into a stock like Iliad right now, betting on the growth prospects and perhaps the turnaround that we might be seeing, the green shoots that we're possibly seeing in the construction sector locally?
Look, I think you're either a believer or you're not. If we are turning around, the construction sector has definitely lagged substantially. There's definitely long-term value there. How long it'll take to materialize, I can't say. Whether it turns around in the next year or two is even hard to say. But as a long-term sort of bottom draw portfolio, I think it's definitely an area where you could be looking for value.
And of course, Woolies is a stock that we're keeping our eye on. It continues to hit new highs and closing near the top of the top 40, just below Remgro today. What are your thoughts on that share price and the rally that we continue to see in that retailer?
Well, that share price is, I think it's exceeding all expectations, a massive outperformer today. There possibly was an element of short covering, a bit of a short squeeze going on at the moment. In that, but having said that, there's also genuine buying around. Woolies has a lot of growing ambitions, and we've also heard talk recently that they're looking into going into the full-scale supermarket type project. And with current management being in such favour and with such a good track record over the last few years, you probably find there's a real positive groundswell of momentum that's driving that share price.
Are you waiting for a pullback though? Because sitting at 47, 43, many are saying that it could be a little bit pricey right now, but we know that even though some have been warning about that, the share price continues to outperform.
Look, it certainly is looking squeezy and pricey at these levels, but I think be careful to sell these retailers too soon. I would be waiting for a pullback personally, but a lot of people aren't by the look of it.